Welcome back to the channel. My name is Aldane. On my channel, I talk about personal finance, investment, and how to build wealth and preserve wealth for the future. Well, today I'm going to be talking about would it be better to invest in single stocks or ETF? Because, a lot of people out there, they want, a lot of people know what's going on in the world pertaining to investments and stuff because it's all over the internet. But this is just my take on my experience. I've been investing over 6 years now, so I have a small community on YouTube, so I'm trying to pass on whatever information I have for my little small community, and I hope it can help. So my whole take on should you invest in an ETF or a single stock, it depends. So you have to think about risk. So what kind of single stock you're going to be invested in. You could be invested in a blue chip stocks like Tesla, the Amazon. So those are blue chip. Apple. Or, are you going out there and investing in penny stock, which is a penny stock would be a stock that the market cap is pretty much small, and I would say typically a stock that's less than $5 a share would classify as a penny stock. So they all have their ups and downs. So I would say I would build a really good portfolio. You could make a portfolio with single stock and also ETF, but I think index investing is better than actually like invested in a single stock because like you could buy like an ETF VOO and now you have almost the whole stock market. So for you to actually go way down on your return on your investment, even if you go through a crash, when the ETF crash, you might down less percentage than when the single stock crash. So I think index investing is the way to go. So I would suggest like, and this is not a financial advice, I would suggest do index investing, like invest in VTIT, invest in VOOO, VUG, SCHD. Those are good ETFs, and those ETFs actually almost like track the whole, almost like the whole stock market. And you can put a couple blue chip stock within your portfolio, but you got to be mindful and you have to learn about asset allocation. You have to learn about how to rebalance because just think about it. So you have a portfolio that have a bunch of growth stock in it. Here one, your portfolio do well and it go up, and you didn't rebalance, which is like take profit and use like asset allocation to take a little bit from that, put into more like a bond or maybe like a SCHD, which is a dividend fund. So you have to actually know what you're doing pertaining to like rebalancing and stuff because your growth stock gonna go up, and if you don't take profit, say you have 20% year one, and then year two come and you don't take profit and you have 30% year two, and then year three come, now you're down, now your portfolio is down like 15%. But if you did rebalance your portfolio maybe every 3 months, every 6 months, you figure out a date, a time of the year that you want to rebalance your portfolio, and then you use asset allocation now. So now you take money from whatever you're doing good in and whatever not doing so good and build that up more. And you keep on repeat and rinse that and just take it. But that's just my take on single stock versus ETF. But I think index investing is the way to go. Big believer on ETFs because now you're tracking the whole market. So for like VOO, if you buy the ETF VOO, the whole almost the whole US stock market have to like go to zero for your money to go to zero. But if you buy a single stock, if you buy Apple and just say Apple have like a big lawsuit and then their stock is down like 70%. Now you have to think about your portfolio. If it all have single stock in it and Apple maybe build up most of it, now your portfolio gonna get hit really hard. So that's all I have to say for today. If you find any value in my videos, please like, share, and subscribe. Thank you so much for watching.